The main economic impact of this budget, the main message certainly I'm left with, is its overall economic impact. Last year at this time I said fiscal policy was back. I suggested you couldn't ask fiscal or monetary policy to be doing any more to break that secular stagnation shackle that had been besetting Australia for the decade before the pandemic. Now unemployment's at 4%, inflation and investment intentions are rising. Policy has done a great job actually to break those shackles. It's taken Australia out of that secular stagnation era. Policy now needs to cement those gains. As such, the policy task over the next year really will be to manage the transition to more sustainable resource use in the economy through what I think will be a challenging, calibrated tightening in policy. Based on what's in the budget, that policy effort to restrain the economy is falling largely to monetary policy. The context, of course, is that neither has monetary policy done very much so far to reverse the easing that was delivered through the pandemic. Maybe some numbers. The budget shows only a $1.8 billion improvement in the budget balance over the coming year. That's pretty small. Spending is down a bit as a share of GDP, but last year was a record by quite some margin. We expected additional spending in the budget of $25 billion over the 5 years of the budget, but the reality actually is closer to $40 billion. And net debt as a share of GDP actually continues to rise to the 24-25 budget year. Even the economic forecasts are a bit on the conservative side, suggesting we could see even some additional spending be forthcoming after the election. Fiscal policy is working hard to ensure the economy is going to stay, I think, very, very strong. And once the RBA starts to tighten, it will need to move quite some way, and I think with a degree of vigour to ensure inflation remains consistent with its 2 to 3% target band. We're forecasting the RBA cash rate at 2% by the end of 2022. Remember, it's only 10 basis points today, and the RBA will also, of course, want to ensure it doesn't over-tighten. That balancing act is going to take some judgment. I think it's going to be a big feature of the economy over the next year. That broad message around fiscal policy, I think, comes through this budget quite solidly. It must be said also that the budget's being delivered under challenging conditions. It comes during a once-in-a-century pandemic. I do have my fingers crossed we're getting to the tail end of that. Perhaps the most substantial European conflict in 80 years, boosting energy prices, a domestic inflation cycle of the sort we haven't seen in at least 15 years, an election obviously just around the corner. All those elements have influenced the budget in some way, I think. Cost of living pressures are reflected in tax cuts and fuel excise cuts. There are efforts to improve women's participation in the labour market and the quality of the roles that they take. I think that's quite important. And there are some measures to help address the climate challenge. The commentary around the budget, I think, is likely to revolve around how much it sustains the economy's strength in the short term. And remember, the economy is already doing quite well at an aggregate level. With the economy virtually at full employment, the route to economic prosperity in the medium term really centres around raising productivity and raising the quality and quantity of participation. I think those issues are sure to return as a policy focus soon.